I'm not saying gold's going to go to 40,000 too. What I do want to suggest to gold people who've been in it for a lot of years, who saw it trade basically in a range for a lot of years, don't get caught in this concept of people that have been bearish going, it has to go back because it's so far higher than it used to be. No, that's not the case, especially given the fundamental argument now for gold. I would just say that it would be hard pressed to see gold much below 3,000 anytime within, as far as our eyes can see, but a very strong chance of 4 or 5,000. So you still need to look at gold favorably, in my opinion.
Gold markets posted their strongest performance in over a month, as a combination of macroeconomic pressures and renewed investor appetite drove the metal higher. A weakening US dollar and declining bond yields created favorable conditions for gold, which becomes more attractive when the opportunity cost of holding non-yielding assets diminishes. Safe haven demand also surged as rising geopolitical tensions and looming trade disputes, particularly between the United States and its key partners, added uncertainty to global markets. Peter Grandich of Peter Grandich and Company remains firmly bullish on gold. He cautions against the notion that gold must retreat simply because it has already climbed significantly. The fundamentals today are strong, and there's no reason it can't go higher, possibly even to $4,000 or $5,000, he says, doubting the metal will fall below $3,000 anytime soon. Central banks continue to play a key role in supporting gold prices. Grandich highlights strong buying from BRICS-aligned countries, reinforcing gold's role as a reliable store of value amid economic instability. The Central Bank of Brazil, despite not purchasing additional gold since 2021, reported a 23.4% rise in the value of its gold reserves in 2025, now totaling $13.7 billion, thanks to the recent price rally. Alongside gold, silver is also gaining the attention of investors. Grandich believes silver may offer even greater upside in percentage terms. While he's not entirely shifting his portfolio, he says silver deserves equal consideration. Silver prices advanced in the European session on Monday, marking a fourth consecutive day of gains and approaching a 14-year high as strong demand continues to drive momentum. Make sure to tune in for our expert analysis. Don't miss out on future content, hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
So it is done. You get a little nervous when it does mostly what you hope and expect it to, especially over a long period of time, because you have to learn to say the words, I was wrong in this business, or else it'll never last. But it reached a peak. It was at a point when it got close to 3,500 that I actually sold physical bullion so I could get more exposure to mining shares and juniors, and the belief that there'd be a consolidation period for gold. I had hoped that it would last the entire summer. And the reason is I felt, one, I'm a big believer in moving averages in commodities, and the moving average of gold where it was versus where the moving average was, the 200-day, was so far that it almost had to stop running, which it did. And now that moving average has crossed over 3,000. And if you want to believe in 4 or 5,000 or more in gold, which I do, the longer this consolidation period would go, the more benefit it would be to reach that. So I'm as pleased as anything. I think the reasons why gold did what it did, it's always easy to look back, are still valid. Central banks are major buyers. Many of those banks are associated with the BRICS movement. The BRICS movement is moving forward no matter what Donald Trump wants to try to say about it. And people are starting to realize that there are a lot of other issues, both domestically as well as worldwide, where gold has become affordable. I would like to make one point, if I may. I've tried to do this in interviews. It's not often discussed because there aren't old dinosaurs like me left still talking. But when I started way back in the dinosaur age of the early 1980s, the U.S. stock market for 13 years traded just between 700 and 1,000. In fact, people were so bearish on stocks that there was a famous Business Week front page story called Equities Are Dead, that they never saw the stock market ever going up much again in their lifetime. And a young man came out of Gainesville, Georgia, that no one knew of, named Robert Prechter Jr. at the time. And he predicted a 3,600 Dow based on something no one knew about called the Elliott wave theory. And I remember my broker, I was a warehouse manager, and I remember him scoffing. He's, who's this kid? What does he know? The Dow never goes over 1,000. Well, we all know I'm not saying gold's going to go to 40,000 too. What I do want to suggest to gold people who've been in it for a lot of years, who saw it trade basically in a range for a lot of years, don't get caught in this concept of people that have been bearish going, it has to go back because it's so far higher than it used to be. No, that's not the case, especially given the fundamental argument now for gold. I would just say that it would be hard pressed to see gold much below 3,000 anytime within, as far as our eyes can see, but a very strong chance of 4 or 5,000. So you still need to look at gold favorably, in my opinion. When it went under 30, I put out a big thing. I put this silver dome on the top of my head and the writing and all, because I used to say, people used to ask me, Mr. Grandich, what do you think of silver? And I said, well, it's like kissing your sister, so that changed. And I put it on the same level. In fact, about 2 months ago, I wrote that I think it's about to lead gold, that it could actually go up more percentage-wise. So I'm a much better believer in it. I still will not overweight myself in it, but I would have as much silver as I would have gold now. And of course, the silver mining stocks and all. But my favorite for this year was, and still remains, is copper and uranium. And so I would say that uranium and copper are battling it for first place, but right close to them second is gold and silver.
The global financial landscape is steadily shifting toward a post-dollar era, where reliance on the US dollar is diminishing at an accelerating pace. A multipolar currency framework is gaining traction, favoring a system that recognizes and utilizes a broader range of national currencies in global trade and financial interaction. While some view de-dollarization as a disruptive development, it may ultimately lead to a more balanced and resilient global economy. Peter Grandich highlights the growing momentum behind this shift, pointing to the rising influence of the BRICS bloc. The BRICS narrative has only gotten stronger. More and more countries want in, he says. It's become clear that the geopolitical winds are shifting. Over the next 6 to 12 months, Grandich believes it will become evident that the aggressive tariff strategies implemented by the US have done more long-term harm than good, particularly as alternative trade alliances strengthen. This evolving dynamic has stirred heightened tensions between the United States and the BRICS nations. Following the July 2025 BRICS summit, former President Donald Trump responded with renewed threats of tariffs, posting on Truth Social that any country aligning themselves with the anti-American policies of BRICS will be charged an additional 10% tariff. Let's get back to the interview.
Well, how he sees it and how the rest of the world is seeing it, I think, is two different stories, Charlotte. As you know, you're correct. The main thing that got me into gold in 2021, I made a decision that probably 1 in 50,000 people didn't do. I sold stocks and bonds just to own physical gold, mainly because I believed the price was going to be driven up because all these central banks were going to buy gold, because eventually they have recognized that trading, at least minimally among themselves, or eventually a new world reserve currency will have to come into play, and it will not be able to be a full fiat currency. It's going to have some sort of physical hardness to it, and gold was the best thing that they could see that it was. And that was the theory of owning gold, and it's played out. The BRICS story has only gotten better. I like to say that who's ever the head of new membership director for BRICS has to have a big smile on their face, because people have realized that Trump has taken a big stick into this trade war when he should have took an olive branch. And if you look at what he was saying weeks before and then days after he implemented his program, all of it was basically saying they're going to be at my feet in a matter of days begging for deals. Well, here we are, the middle of July, and there's no real deal of any consequences that's been done. Countries are now openly, including Canada, speaking opposition to it, that we're not folding, or, it has to be fair for us and all. Will he get something different than existed before? Yes. Will it be anything close to what he sold it on and what the stock market currently thinks is going to happen? No. And therefore, I don't think tariffs, while we're talking about them now, we'll be talking about them in the same manner 6 to 12 months from now, because I think what will be recognized by then is Trump's done more to hurt the long-term prospects for the United States than help. That's a minority opinion right now, but I'm kind of used to being the minority opinion in 40 something years. It's been the life of a contrarian that I've mostly been. But I do think if you look outside US media and you look at financial media in Asia or Europe, they will concur with that these countries are moving away from the United States. And after it's all said and done, they will not have the same great, the Magna Group likes to say, make America great again. And they also like to think that somehow it'll be like it was 40 or 50 years ago. That's impossible. It's totally changed. And, it sounded great, especially after the last administration where those type of people couldn't stand for a minute for what they were doing. But I think a lot of things are being chipped away on Trump. And I think he has other issues now with Powell and this Epstein stuff and all, that he's just not going to have the influence that people perceived back in April that he could have regarding tariffs. Well, we just had the Fed book, beige book, come out as you and I speak today. And it's again showing an economy that's clearly decelerating, not to the point where it's falling off a cliff, but it's weakening on several fronts. I don't see anything. I mean, Trump can yell all he wants about we got to get interest rates a lot lower. Yeah, that's great. But look what happened by interest rates going to 0 or 1%, all the issues we have now and all. But separate from that is just cutting interest rates is not the reason. But there's a reason he's doing that a lot of people don't talk about. We have $10 trillion almost that has to be refinanced in the United States. If he could get it 1% or 2% lower, it would not be as bad for our debt and deficits as the case. But we have to remember one thing. When the Fed cut interest rates a year or so ago, the long end went up. It increased by 100 basis points. And that's because people are starting to realize, hey, not only is the United States never going to pay back this 37 trillion on our way to 50 trillion, they may start having problems paying our interest. We're going to want a higher interest rate in order to buy your debt. That's the big challenge. I say this often now, especially in our planning group when we talk with people. Folks, you got to watch the bond market, not just the stock market. It's much bigger and it will have more of an influence on your economic and political life than the stock market will. And the bond market is continuing to suggest that the least resistance in rates is up, not down.
Momentum is quietly shifting beneath the surface of the global monetary system, where the old rules of reserve dominance and trade alignment are being rewritten in real time. As currencies realign and new alliances gather strength, gold and silver are no longer just safe havens. They're becoming strategic assets in a world recalibrating its definition of value and trust. With rising tensions reshaping trade policies and investor behavior, these metals may soon reflect not only inflation hedges, but also the very architecture of the emerging global economy. Are we nearing a monetary realignment where precious metals become more than just defensive plays emerging instead as benchmarks of a new financial equilibrium? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.